Hi, it's Martin Gila from Gila Forex, and today we're going to be taking a look at a few more details of the hedge and hold strategy. We'll first of all take a look at the size of the account. This right now is a $542 account. It's achieved a $542 level in 4 weeks. That's up from $397. So I started the account with $397. We've now been able to move it to $542 over a 4 week period. And all we've done is use the hedge and hold strategy with very, very small trades. The difficulty with trading with a small account of anything in the $500 range or less is your trades are very, very, very small. You're making micro trades, but at the same time, you're able to achieve an overall very, very high return on investment. For this account going from 397 to 542, we've achieved about a 73% increase in the account. Now, there's a little caveat to that. We're going to cover that in just a moment, but we'll take a look at the size of the trades first. If you see you look up here and you look at the size of the trade, we're only trading 0.02 of a lot. So it's a very, very, very small amount. But with this type of trading, you want to be ultra conservative. You cannot be aggressive with this type of trading because the size of your trade obviously is going to be dependent on the size of the account. If this was a $5,000 account, a $50,000 account, a $500,000 account, our trades are going to be much larger. This size of the trade will be larger. The strategy will stay the same. So you want to stay fairly conservative simply because the market can suddenly fluctuate very, very rapidly, and you can be left holding several trades at a time. And if your account isn't in a position to be able to hold a large number of trades, if you've been trading quite actively, you can suddenly lose the account. You'll end up having way too many trades for the size of the account. So your size of your trade, let's say we'll look at the $500 account. We're going to use 0.02 for a trade, and we just made a couple of trades here. You can see there's not really too much action going on in the market right now, but it doesn't really matter because these trades that we're making, we might end up holding for 2 or 3 days. We might end up holding for a couple of weeks, depending on what the market does. So what we're going to do, no matter where the market is sitting, you place one sell, you place one buy, and that's the two here. So you've got you got a sell here, you got a buy here, and then you just basically drag the line down to where you want to sell. And usually I'll try and take about 100 pips. So you go down to here, and it should actually show you. For some reason, it's not going to show you exactly what it is, but okay, normally it shows you, but you can. This one here actually is 210 pips. $202.10, which is 110 pips, and I have to apologize. I don't know why it's not showing it. Normally, it'll show. If we drag it, it'll show it maybe for us. All right, there we go. So now we're sitting at 112 pips, which gives us $2.24 when that trade actually executes. The same with this trade up here. There we go. It is we're going to take profit at 100 pips, which gives us $2. So the amount of the trade is very, very small, but the number of trades suddenly in a day, depending on what the market does, you can end up executing several trades on the same day. So if we take a look at what this account actually has sitting in the trades, you can see down here, of course, there's 1, 2, 3, 4, 5, 6, 7. There's 8 open trades currently. And we'll show you where they are if we go to the 1 hour line. So you can see we're kind of in the middle of a bunch of trades. There's a bunch of trades happening around where the market currently is. There were some trades made up while the market was up as high as it has been in the last few days. So we're still holding some of those buy trades simply because they didn't execute. The market didn't go up, it actually went down. So that's where you can see some of these trades here. We're holding a trade that's a negative 33, negative 32, a couple around $20. So that's where your negative number comes in, is you still have some trades because you didn't put in a stop loss. You're actually holding those trades until they execute. So you're not losing money when it hits a stop loss. But if the market suddenly took a real large dive, uh, it is quite possible that you could end up going below the limit on your account. So there's always risk. You need to make sure that it's a calculated risk. So you don't want to trade large numbers or large lot sizes until your account can actually hold it. That's why you want to make sure you can even start here at 0.01. So you can start trading at 0.01 and taking trades, taking a profit at $1. So you start off very, very small. You're not going to become an overnight millionaire with this trading system unless you have $1 million to put in, and you can work with it from there. But the system is solid as long as you make sure that you take the appropriate level of risk, and you should be able to increase your account over time. This is more of an investment strategy really than a forex or a day trading strategy as you would normally see within the forex market. And it does take some time to make some money, but even though it's taking some time, you can see here we're still in profit. We've gone from $397 to $420. Now, mind you, that's only something like $5 or $6 a week if you look at this part of it here. But again, that's only 4 weeks, and this isn't a strategy that you're going to make money very, very quickly. It's a strategy that you're going to have to hold. Hence the name hedge and hold, and it'll make you money over time. So this one here too, the strategy is pretty good if you have a day job and you want to trade just basically when you have a chance. You don't have to watch the markets all the time. For example, you can look at it maybe once in the morning before you go to work. If you have time at lunch to take another look, and whenever you get home, check it out again. That way you can set your trades. Some of the trades generally will have executed during the day, so then you can reset the trades on wherever the market is. Kind of gauging as well. You don't always have to do a sell and a buy at the same time. If you're looking at the market and you've ended up, the market gives you, let's say, a couple of sells, and you've got a couple of buys kind of up higher. Let's say, for example, up in this area here, we've already got a couple of buys. So if the market's sitting in this area here, I'm probably not going to take any more buys because I'm fairly close to these ones here, but I'll take maybe a sell. So I've got that part of the market covered, because you want to kind of cover the market in the range of where it's kind of fluctuating within the last week or a couple of weeks, and that's pretty much the area that you work within. So it's not very, very large an area, because the market is going to kind of fluctuate between two fairly stable points. I mean, it's the market is what it is, so it's not totally stable. But if you look here, we're at 1 point, our highest points in a little bit here, so we're 1.080808 with a bunch of 08s, a little bit higher than that, and down a little above 1.06. So it's only fluctuating within a couple of cents, and that's where we're really working on the trades in the market. So I suggest, with this type of a trade, with this type of an account, or with this type of strategy, you give it a try and find your comfort level, because it is a little bit of a little bit art, a little bit science, but a lot of your comfort level. How comfortable are you with the risk that's involved in this type of a strategy? So again, small account, small size trading. If you have a larger account, if you're in your account, let's say, is $5,000, then you can look at doing trades that are 10 times this. So you could be trading single lots, for example. I hope this helps. I wish you very much success in your trading. If you have any questions, comments, anything, leave them in the comment section below. If you're watching this video on YouTube, if you're watching it somewhere else on another website, if you click over to YouTube, you can leave comments, and I will endeavor to answer any questions and comments that you have. And good luck with your trading. Anything I can do to help you, leave it in the comments, and I will try and do my best to help you by answering any of those questions. So thanks very much and have a great day.